Because your mouths are full. Fantastic. All right, so session number 2 is a bit of a power session, and we are leading off with a fellow who is no stranger to these conferences. In fact, 2024 marks his 10-year anniversary. So give him a big round of applause as he comes up on the stage. Young Adam. Oh, well done. Okay. Don't indulge him. Stop. He's got some faults, young Adam. One of them isn't in his knowledge in finance. So today he's going to share his wisdom with us in his guise as partner in corporate finance at BDO. And his discussion today is takeovers and market views. So he's giving it from the perspective of ourselves as investors. Happy 10-year anniversary, Adam, and good luck with your footy team this year as well. Make him welcome, please, everyone.
Thanks very much for the introduction. Thanks for the music, Jax, and love the BDO colour scheme, which just happens to tie to West Perth, and like to acknowledge our sponsors of the footy club in the room as well. We've sort of done a lot of analysis of quarterly cash flows over the years, and what we see in the 5Bs is that over the last couple of years, there's been a change in what we've observed long term. There was some periods where really there was a struggle to get cash, not a lot of exploration going on. That sort of turned in the last 2 years. We've seen cash accumulated, we've seen exploration results. So it's sort of set the scene where there's companies with cash available to deploy and projects that are advancing and becoming more palatable for takeover. And certainly towards the back end of 2023, we saw some takeover activity, and we're certainly getting a lot of inquiries at the moment, and we're seeing that heat up. So we thought it'd be a good area to sort of touch on in terms of some of the process and things that you might want to think about as investors. Now, this is only 15 minutes, so can't touch on everything, but we'll try to sort of give you a bit of a touch on a few key things. I guess the first element I want to talk about is sort of some shareholding levels of significance to think about as a takeover progresses through. The first really important milestone is the 5%, and that's where your substantial shareholder notice is required. So the world becomes aware that you're on the register, and at that point you start to get some speculation, and you might see others start to make a move once they're aware of who's hit the register. Every time you increase by more than 1%, you've got to lodge another notice that you've changed, and you've got 2 business days to do that. Once you get to 10%, you then are subject to restrictions around related party transactions and other things. But the key point is once you're above 10, you can block a compulsory acquisition. So that becomes a very key strategic stake for people to accumulate. Once you get to 20%, that's sort of where our bread and butter at BDO is. If you go over 20%, you are then required to make a takeover offer unless you satisfy some exceptions or get shareholder approval. So we do a lot of experts reports, and we'll sort of touch on them at the end if we get some time. But that's really, I guess, why you'll see a lot of people go to 19.99 to avoid that, so they've still got the optionality. Obviously at 50% control passes, 75 significant from the point of view that a majority shareholder can pass a special resolution, so therefore it becomes a little bit more difficult for the minorities. And at 90, you move to compulsory acquisition. So once you see a takeover sort of progress to that 75 and 90, you can really see some momentum occur there. So those are key things to think about as you see a takeover unfold. The time frame is very important as well, and we do see some people panic a little bit about having to do things quickly. And I guess there's some contrasting elements there. And so the time frame really comes down to an announcement of a bid is, an intention to bid is made. That can be up to 2 months before the bidder's statement is then issued to the ASX, ASIC and the target. That's what starts the clock running. That bidder's statement has to sit with ASIC and ASX for 14 days. After that, it can then go to shareholders. That then starts the clock for the bidder, who's then got for the target, who's got another 15 days to respond with a target statement. If there's a common director, or there's a greater than 30% pre-bid stake, then an expert's report's required, or they can choose as a board to get one for their own benefit. That's really what the timetable looks like. Once you've got the bid open, it has to be open for a month. So there isn't a huge rush, and you'll see the holding statement made by a target, take no action, wait till we get our target statement out. So you've certainly got some wriggle room there. The bid can go for a maximum of 12 months, and we know that does certainly frustrate some shareholders when it bogs down and drags out. The only key difference is where you've got an on-market bid, as soon as you've lodged that bidder's statement, you can commence acquisitions on market. So a lot of people think that someone can buy on market during an off-market bid. That's not necessarily the case. So there's no need to panic there. But if you are seeing on market, it can move quite quickly, as we'll touch on later on. So I guess touching on the forms of bids, I mentioned on market that the bidder's broker stands in the market and can buy from the date that the bidder's statement is lodged. Because it's in the market, it has to be cash, has to be unconditional, and partial bids can't be made. Contrasting an off-market bid, you make an offer to each shareholder who then responds in writing accepting that offer. Can be cash or shares, so you get some flexibility around consideration. You can also put conditions in around minimum acceptance, regulatory approvals and other factors that may impact the bidder's I guess ability to complete on that. So if you had a minimum acceptance condition of 50%, if that fails to get met, then the shares remain with those accepting shareholders that can't get fulfilled because of that condition. And you can make it proportional. The third element, which we do see misreported a little bit, you'll see people saying, oh, you know, a shareholder voted against a takeover. It's not voting against a takeover, it's against the scheme. So a scheme's a slightly different process. And it really is a process where the bidder and target are actually working together to produce the document. So it is more friendly in terms of, you know, it's being negotiated. It's not necessarily hostile like an off-market bid that lobs unannounced. It may have conditions that need to be met prior to coming into effect. And the process runs through a court hearing process. The first court hearing is around approving the documentation, making sure the shareholders have got all the information they need to make a decision. A vote is then had, and you've got to get 50% by number of shareholders and 75% by quantum of votes in each class. So quite a high bar, and then binding on all shareholders. So it's an all or nothing bid. It does provide a fantastic level of flexibility. So you can have a structure where you might carve out another entity with certain assets. So if you've got a diversified group, you may group all the gold assets for the takeover and then spin out, say, lithium assets to another vehicle and continue to trade on. And the second court hearing really is about a procedural matter where they look at, did the process get followed? Are there any dissenting parties that should be heard? And ASIC will also appear at that and give their letter of no objections. So I guess as a shareholder, you really need to think about, you know, what's in this for me? Why is this bidder undertaking this transaction? What's in it for them? And then really looking at balancing that with, well, what does that mean for me? And so I think what we've seen recently is, you know, a real focus on cost of production. You're seeing a consolidation in regions to more effectively feed an operating mill, to try to get the cost of production down. And that certainly makes a lot of sense to bring sort of sub-capacity assets into a more efficient structure. You've got other entities that are looking at extending the life of their operations. They've got a project that's nearing the end of the life, so they're looking for extension. You know, and the other thing we've sort of seen over the years is large explorers, not as a rule, but in general, have moved away from exploration, and they're using the M&A process as a way of adding sort of advanced exploration or pre-development assets to their portfolio. So certainly there's some opportunity there where you can realise some value. The other element, as I mentioned at the start, is some companies have cash, and you know, financing through the markets or debt may be expensive compared to going to an industry player that does have a cash balance that can add to that mix. So certainly there's some opportunity there. And I think those are the sort of examples where you can see some sharing of the value, and it's really about how that value gets carved up between the parties. There will naturally be opportunistic bids where a party views an asset as undervalued, its share price might be bogged down for all sorts of reasons, and therefore they swoop. So that's what you need to think about as an investor, is what's the motivation, and then how do you respond, and keeping in mind that you've got a bit of time, as we mentioned before. We'll just sort of run through a couple of examples of takeovers that have taken place, just to sort of talk about a few of the features we've seen there, and to give you an idea of how the process played out. So with Essential Metals, Tianqi and IGO announced a scheme to acquire at 50 cents a share. Just before the scheme meeting, Mineral Resources acquired a 19.99% stake. There was a lot of speculation about would another bid be coming, and you would imagine that that actually affected the vote because people were waiting to see what's next. MinRes didn't raise a bid and they voted against the scheme. That then led to Tianqi saying that they wouldn't proceed with a restructured deal. And there is a truth in takeovers law, which means if you make a statement about a takeover, you've got to stick with it. So they were out of the running. IGO obviously couldn't move alone, given that it was their JV partner. Therefore, it left the asset available. Develop came in and acquired Essential via a scheme for scrip consideration. We think that was a key difference as well, that shareholders were exposed to the assets rather than a cash bid, which took them out of their exposure to the lithium play. Another example, which I think is interesting for us because we certainly saw this being structured to try to avoid that last-minute hiccup. So SQM announced a bid for Azure. And as you can see, Azure really picked up in a reasonable premium there. It's an exploration asset, so very early stage, really. So a great result. What then happened was the scheme was priced at $3.52, or if the scheme was voted down, an off-market bid would be launched as soon as that happened. So we saw that as a potential effort to protect against bid disruption. What we then saw was Hancock and Mineral Resources both emerge with significant stakes following that. And then you've had a negotiation process between SQM and Hancock to actually announce a joint bid. So they're working through the process of getting regulatory approvals to make that occur. So quite interesting to see sort of the change in structure, but not necessarily the desired outcome from the structuring. And I guess to sort of give you an illustration of how an on-market bid can add to the speed of a transaction. So we saw New Century, where on February 21st, Saban launched an off-market takeover offer, but a key element to that was that there was a on-market facility for a certain number of shares. That was immediately filled. And on February 22nd, they announced that they'd got to 40.58% and announced further on-market purchases. And by the 23rd of Feb, they already had over 50%. So you can see that in a very short time frame, control had passed, made it very difficult for the board to respond in a way that meant that they had time to communicate to shareholders. So certainly one where you can see that speed of transacting, which, if you're a shareholder who's been looking to get out of a stock, fantastic. You obviously get, normal settlement. You get your money a lot quicker than some of the other structures, but yeah, it certainly moves a lot faster. I guess given that we have, a few lithium stocks after this, we thought we'd give a little bit of commentary about some of the things we're seeing on the market. And certainly I think it's important to have a look at the long-term views of where lithium's headed. Certainly we're seeing short-term pricing issues, but what we've observed is, you see Rio, Wesfarmers, Mineral Resources coming into exploration plays, which really shows that they're not looking for short-term production, they're actually looking at a longer-term thematic. So certainly if those entities are having a longer-term view that the market's going to come back, that there will be that future demand, then I think we can see a turnaround, in the sort of medium to longer term. And then the important thing is really to not panic, look at where is the stock exposed in the market, and you can sort of see that Azure, obviously an exploration play, not being exposed to costs of production, has performed quite well, and then obviously has the bid underpinning its value. Then you've got Core and Pilbara producing, and they really did correlate for a large part of that period. And then they've diverged, and really that divergence is around cost of production. If you look at their quarterlies, the cost per unit certainly is vastly different, and Pilbara can withstand that cost pressure a lot better because of their margins that they still have, whereas Core is having to restructure a bit. We're seeing a bit of that in the gold space, as I mentioned, but obviously the gold price is a bit more forgiving, so the high cost producers are still okay. We're seeing a lot of movement in copper. We've certainly been involved with the metals acquisition raise that has just been completed this week. So certainly some interest in copper. Nickel, as you're probably aware, does have some structural issues, and it really does need, I guess, a move away from some of the Indonesian production, but that's not really an easy issue to deal with. Really short time frame to explain. So we do have some ebooks on our website. So if you look up the IER ebook, there's more information about how experts reports work. And then also Hamilton Locke, who presented yesterday, they've got a great guide to takeovers where you can go into more of the legals, and that is my time. So thank you very much.
Well done, Adam. It's your 10-year anniversary. You can have 3 extra seconds. Okay, it's not often you see an exclamation mark used in an ASX announcement, but they were there in bold when this fellow made his last announcement. This is Nick Holthouse from Meteoric Resources. They were reporting on their rare earth iconic clay project, which is in Brazil, and the headline was, "Truly world class!" Exclamation mark. Take it away, Nick. Make him welcome, please.
Thanks very much, Christine, for that welcome. Thanks to the organisers of the conference. Having a great time here. The booth's been really well attended, so that's been fantastic. Certainly exceeded my expectations. And thanks everyone for turning up to listen and hear a little bit about the Caldera project and why we think it's special, and to impart with you some of our plans going forward. It really is on a rocket. It is a world-class asset, as we've noted before. It's getting a lot of interest. And it's certainly a project that we can get into production fast, and that's really what we're all about. So the engineering packages and everything that are progressing in that space are lending towards that. Just the disclaimer, the standard health warnings there. You can read them at your own leisure. Okay, a little bit about the company. We've been trading reasonably stable for the past 5 or 6 months. More recently, though, some downward pressure, and that's we've really been caught up in that off-risk approach in that critical mineral space, much as we've seen in the nickel play space, the lithium space, rare earth elements, any of those sorts of projects are absolutely feeling that pinch as well at the moment. So that's put a little bit of downward pressure on our share price more recently, but they're not the only reasons. There's also been a lot of pressure in the rare earth industry with regards to pricing, and China recently, in fact as late as last week, announcing an increase to their refining quotas, certainly is going to keep neodymium and praseodymium in its place for some time yet. Those two elements are really the drivers in most people's baskets, and I really don't see too much upside in the rare earth pricing space in the next short while. So that is a problem for a lot of projects, but for this particular project, not so much of a problem, and I'll share that with you a little bit later on in the presentation. In our treasury, around $32 million. Most of you are aware of the board of directors, especially Dr. Andrew Tunks, our chairman. He's very well known in the industry. In Brazil, we have Dr. Marcelo de Carvalhais. He's also our government relations officer over there. He does a fantastic job in that space, and I'll talk a little bit more about that going forward. Dr. Paul Kiddo, and more recently, and of great interest to most of you, will be the appointment of Mr. Peter Gundy, the only doctor not on the board. Mr. Peter Gundy, he's a bit of a Trojan in the industry. He was the guy who set up Neo Performance Materials. He has an intimate understanding of the mid and downstream operating space and that connection into the OEMs. He set up facilities throughout China. He has also was instrumental in the purchase of the Estonia facility, Silmet, and what's going on there. He has stepped out of that business, but is still very much involved in that space, and it's great having his perspective on the board to take this forward. Just some investment highlights. There's quite a few there, but and I think Christine mentioned it a little earlier on. It's a globally significant, as yet inferred resource, but we are doing quite a bit of space in the drilling area. We're focusing on our near mine opportunities with infill drilling and increasing the confidence in those resources. So bringing predominantly indicated resources to market, so there'll be additional tonnes, potentially some shift in the grades, unlocking the very high value dysprosium and terbium values that we are chasing to bring into our basket near term, but a lot happening in that space. So currently we're sitting on 409 million tonnes, around 2,600 ppm. That's a really great number. But inside that, and of more interest to me, and there's a slide that demonstrates it beautifully a little further on, there's a very high-grade portion of around 120 million tonnes at plus 4,000 ppm. Now, this is really exciting to me in the mine planning space, and it's something we're absolutely focusing on in our near mine production and our story going forward. We've spoken a little bit about grade, but that translates to a fantastic basket. Now, this work was undertaken by JOGMEC back in 2019. The basket recovers, the recovered basket to the carbonate is around 31% NdPr and about 1% DyTb. Great NdPr number. We'd love to see a little bit more dysprosium and terbium in our basket, and we're certainly going to be chasing that in our schedule going forward. The metallurgical recoveries from the previous work and with the ANSTO work going forward are another very strong component of this story. The ANSTO test work, you would have seen the announcement recently on the recoveries to the leach phase. That's only half the story. That gets your ionically absorbed rare earth elements into solution. The next stage is impurity removal and then precipitation down to a carbonate. Now, we've just done some work around the precipitation to the carbonate story. We can't release those numbers yet, but that's certainly looking very good. So we're looking forward to bringing that to market very soon. So that whole process right through to the carbonate story, our saleable product, looking very good. We also have significant land holdings within the Caldera. It's around 193 square kilometres, and there's about 63 or 69 tenements that make up that package. So essentially we've got a resource that sits on around 10% of that. So we've got an awful lot of optionality going forward and a lot of work to do in the exploration space too, to see what we can find. Predominantly with the dysprosium and terbium, it's really that sort of story we're really going to start focusing on. We know we've got plenty of neodymium and praseodymium, which is a main driver in our basket. 31% of NdPr equates to around 84% of the value of our basket. 1% of DyTb is around 14% of the value of the basket. So you can really see that gearing that goes towards dysprosium and terbium. We've got a very strong leadership team. I have around 5 years experience in the rare earth industry, but more importantly, our metallurgist, Tony Hadley, he's been around since the Linus days, so he's been instrumental in taking this work forward and sculpting that flow sheet, working very closely with ANSTO in that space. We have strong development support in Brazil as well. And this is really important. We're seeing that at the local level, at the council level, we're seeing that at the state level, we're seeing that at the federal level, and at the community support we're getting as well. Alcoa have been operating in the Caldera for the last 70 years, and they've done a sensational job in that community relations space, and we are following a very well-trodden path with those guys. We can't thank them enough for the work that they've done. Mining in the Caldera and in Brazil itself is not a dirty word, and Brazil is very much open for business in the mining space. And again, I can't thank Alcoa enough for that going forward. And I've spoken a little bit about the rapid path to development. We've got our ears pinned back, we're going as hard as we possibly can, and there's some permitting opportunities there, which I'll talk about a little bit further on. Just very quickly, some differences in the hard rock to the ionic clay space. A lot of you probably know this, but it really centres around the cost of capital and the operating cost to run these things. Mother Nature's done most of that work for us. We don't have any robust minerals that we're chasing in a standard AMCEL wash process flow sheet. We're not interested in any of the relict or primary minerals that are still in the clays. We're going to leave those behind. We've got more than enough in that ionic adsorbed space for us to chase. And that is a low-cost option. We don't need to crush and grind. We don't need to drill and blast. We don't need to produce a concentrate. All those pieces of the flow sheet that you see in the hard rock space just don't exist. We go essentially from a clay, which we slurry, we screen out the larger cobbles, we hit it with ammonium sulfate, and then we end up with a pregnant solution, which we then precipitate down into a carbonate. Now that is the difference. Very simple flow sheet, very simple costs, and that is why, even at today's depressed prices, we certainly have significant headspace in our operating costs, and it's a project that could come to market and get financed right now, even under these very tough conditions that we're seeing. Being robust in this market is paramount. You really want to be able to survive these tough times in the rare earth industry, and this project is absolutely placed to be able to do that. The graph you can see there is bubbles representing NdPr content in our TREO. So as you can see, and this is one of the things that I really struggled with when I first was asked to join the group. My understanding of clay projects was really to the left, where you can see that yellow band. That's where most clay projects sit. They sit in that space, somewhere between 750 and 1200 ppm. The fact that this thing was over, very much over on the right-hand side at 2,600 ppm was a real anomaly and very hard for me to get my head around. So there was quite a bit of personal due diligence that I undertook before I came on board, and quite a bit of convincing. But it does get better. And this is the story that I was talking about before, this high-grade portion that we're focusing on for our near mine development. As you can see, it's over 4,000 ppm, over 100 million tonnes of this material which is available, which will be coming into the mine schedule very early on, and getting some extra DY and TB into that basket mix is paramount for us. So that work is being done by some of the exploration work you're seeing off our resource licences. Some of that, and a lot of that work has also been done within the resource licences that we have, the 6 licences which make up the 409 million tonnes. We're looking for those, unlocking those opportunities with that further drilling we're doing at the moment. And why is it so good? This was a bit of an enigma for quite some time, but really I think it comes down to the geographical constraints we see at the caldera. It's a closed environment, and this is unusual. Most rare earth deposits probably have several ways or means of material or molecules escaping that environment. This is a closed environment. There's one small stream system which exits the caldera, and because of that ongoing enrichment and that inability for those molecules to escape during that enrichment process, we're seeing these very high grades. So that is what makes this project certainly different from most ionic clay projects, and is why we're seeing these fantastic grades. A bit of a map showing our licences. They are extensive. 69 licences, 28 mining licences currently, and 27 mining licence applications. So you can see there's an awful lot of work to do in that in the exploration space to sift through this opportunity. As I said before, less than 10% of these licences make up our 409 million tonnes. So the opportunity and the ability to grow this resource is enormous. We don't need all those tonnes coming forward, of course, but we certainly do want to see more DYTB coming through. I keep talking about DYTB, it's very important in our basket. One of the reasons we like Brazil as well is it's a mature mining jurisdiction. In Minas Gerais itself, there's over 8,000 licensed mining operations, so we sit very comfortably there. Alcoa are operating on the left-hand side of the caldera. We have another group called Currumbaba on the right-hand side. So between the two of them, around 70 years of mining operations within the caldera, and that bodes very well. It is a brownfields mining area and it has immense community support. This relates, there's a lot of numbers on this page, but this relates to some of the off-licence exploration that's been undertaken recently and some of the results that went out the other week. There are, all those numbers are incredibly high. They're all incredibly exciting. But really for me, it's that DYTB story that sits amongst them, which requires further follow-up work. So further metallurgical test work and further drilling to bring that story forward for us and get that stuff into the schedule. But I guess what we're trying to do here is demonstrate the enormous opportunities that we have both in the south and the very north of the caldera, and how that translates to near-term success for our mining schedule going forward. And we've spoken about the resource already. So 409 million tonnes at 2,600 ppm. Some of the more recent metallurgical test work. Again, these numbers on the right-hand side, they don't translate to a recovery to the basket. So this is a work in progress still, but nonetheless, what it does demonstrate is that this is with a standard ammonium sulphate wash. So there's no low pH environments here, no heat. What we are seeing is extremely high recoveries to that leach. This is ionic, and that is most of the heavy lifting is done in that very early space there, and bodes well for work going forward. Okay, very quickly, I'm running out of time here. The Capo de Mel area is the focus for our engineering studies. We have a great relationship with Ausenco. You can see the 3 southern licences there, which we are looking at. They are absolutely the focus for us going forward with our environmental test work, our environmental permitting, our metallurgical test work, and our engineering studies. You can see in the fainter lines as well that continuity we have with those additional licences. the ability to grow this resource and extend in all directions is immense. So it's a real plus for us. But Capo de Mel is the focus for us in the near term. We're working very closely with ANSTO, Ausenco and Alga, our environmental consultants, to bring this forward as quickly as possible. The flow sheet, it's a very simple flow sheet, as I said before, and this is really why we have such a low operating cost. The other important thing to notice here is that this entire process facility is going to be operated from 100% hydro. Brazil is quite unique in that space. About 92–94% of the entire grid is powered by hydro, and 100% of the grid within the caldera itself is powered by hydro. So we'll be making the best opportunity we can of electrifying everything we possibly can in that space. The government collaboration. This is an important guy you can see down on the bottom photo, Governor Zima. He is touted to be the next Brazilian president, and this is him at our signing ceremony that we had in Poços de Caldas quite recently. So the support from the State Governor, Minister Reis, and Invest Minas is immense. And ongoing forward. I know we're short of time. I'm going to go skip straight to the schedule. I can feel your eyes staring through me at the moment, Chrissy. Look, I just really want to talk quickly about this. The red diamond you can see in the bottom right-hand side is this opportunity that we have. We have an amazing opportunity to have this thing permitted for construction by the end of next year, and that is something that we're absolutely got our ears pinned back for. All our engineering, our MET test work is absolutely pushing forward to this, and we are committed to making that date. Thank you very much, Christine. Thanks, everyone. Thanks.
Well done, buddy. You did it with good style. All right, team, you managed to pack the room really well. You should stay where you are, because this next one, if you've been watching your media platforms, your resources media platforms, while you've been here today, there have been 3 or 4 big headlines about our next presentation, and one of them read was thick spodumene intervals lighting up Torque Metals' path to a maiden resource at New Dawn. Now, Cristian, you are always passionate about this project, and today I would say even more so. Would you please make Cristian Moreno very welcome to talk about New Dawn and Torque Metals. Thank you, Cristian.
Thank you very much. So let's wait for people to leave the auditorium. No, let's start, guys. So my name is Cristian Moreno, Managing Director of Torque Metals, and today I will explain you why this company is one of the best junior explorations companies in Australia. I said this a year ago, and the share price ran, and you guys, if you didn't invest, well, you lose the opportunity. But there will be another opportunity over there, so I'll explain why. I think that this is not working. Yeah, it's working now. So let's go to the capital structure of the company. We have 150 million shares on issue. The market cap of this company is around $30 million. We have roughly $2.8 million cash in hand. So the market, the enterprise value of the company is around $28 million. But what is really important about this slide particularly is the TOR shareholders. So we have retail investors, 63%. We have some sophisticated investors over there. We have some high net worth investors, and we have someone else in red color, 4%. So watch out that number, guys, because, well, this individual wants to be below 5%. We have some board of directors. I think that everyone speaks about the board of directors. I don't want to go there. I want to speak about my technical team. I've got a resource geo. He's amazing. He used to work in South Africa and Australia. I've got an exploration manager with more than 45 years of experience, and I have 6 geologists overseas that are willing to work super hard in this company. So again, my board of directors is super important, but you have to see what is happening under that. And under that is a strong technical team that is willing to deliver results as quickly as possible. So we have the 3 different projects: the Penzance project, the Paris Gold project, and the New Dawn Lithium project. So let's start with the New Dawn Lithium project. We are surrounded by mineral resources that are the gray color and the black color. We have as well Allkem, Arcadium, that is to the north of my tenements, of our tenements. And we have the red color representing the Paris Gold project, the yellow color representing the new Don Lithium project, and the orange color representing the Penzance Nickel project. It's important to mention as well that we have 12 mining licenses, pre-native titles, development ready. So if we want to go to production, we can do it as soon as possible. How many companies do you know with 12 mining licenses, pre-native titles? And this is going to expire probably in 2052. So we can go to production if we want as soon as possible. But we want to grow the resource. We want to grow and to keep discovering what is in there. So we have also 4 prospective licenses and 26 exploration licenses. But if I go back to this map, so multiple companies express that they have a significant amount of tenements and a significant amount of land in the Goldfields region. We have the same. We have 800 square kilometers of land. And my land or my tenements, they are not located in lakes. We are located in ground. So for us, it's easy to explore. We are surrounded as well by big boys, Mineral Resources, Arcadium, and we are having excellent results. And we just have 150 million shares in issue. So the opportunity for Torque and for Torque investors is huge. We have 2 discoveries, the new Don Lithium project and also the Paris Gold project. But let's go there, let's go there. So this is the new Don Lithium project. We acquired these tenements the last year. These tenements belong to a prospector. He gave the tenements. It was a very, very difficult negotiation. 2 years it took me to do this transaction. Believe me, multiple companies out there were trying to take these tenements out of their hands, and they couldn't. And the reason why I managed to do that is because these guys and this family trust me. I said, I'm going to drill your tenements as soon as possible. That's what I did. I'm going to come up with an exploration target. That's what I did. And I'm going to discover lithium, and that's what I did. So this is the new Don Lithium project. We are just 3 minutes walking from Bald Hill Lithium Mine, 600 meters far away. If you see that, that is the old shaft that this family was sort of extracting lithium and tantalum, and we are really, really close to Bald Hill Lithium Mine. Again, 600 meters far away from them. The geology, as you know, doesn't change that much, doesn't change in 600 meters. So we believe that we have something similar, and the results are showing that. So let's go to the new Don Lithium project. Why this project is good? Because it's hard rock. Why this project is good? Because we are located 600 meters from the producer. Why this project is good? Because we just have 150 million shares in issue. Why this project is good? Because this company belongs to retail investors. The major shareholder of this company has less than 5%, right? So I'm an employee of the shareholders, right? The shareholders are the ones who control this company, not the directors. So this is our project, 2 mining licenses. Apart, we have other exploration licenses, other prospective licenses, but this is the project, 2 mining licenses, pre-native titles with lithium discovered over there. We released the last week an exploration target, 8 million ton to 14 million ton at 1% in just 40% of the tenement, of one tenement, so just 40%. So the potential is huge. Again, 150 million shares in issue and a really, really small market cap. What else is happening? This is not a speculation, guys. This is facts. We are not one of those explorers saying that we pick up some rocks with 1% or doing soil sampling or doing these sort of things that sometimes they don't work. We hit lithium. 10 meters at 1%, 15 meters at 1%, 10 meters at 1%, 10 meters at 1%, 10 meters at 1%. Just go and read the announcement. I don't want to repeat the same. 10 meters at 1%, 10 meters at 1%. These are the sections of the new Don Lithium project, multiple vertical stack pegmatites. So if you read what is happening with, what used to happen with Tawana or Bald Hill, is exactly the same mineralization style. Multiple vertical stack pegmatites, and all of them mineralized. What are we doing now? Extending these pegmatites to the north, extending these pegmatites to the south, they increasing the mineralization and working super hard because, yeah, I want to come up with a potential mineral resource estimate ASAP. So another section over there, totally mineralized, all the structures are totally open. And some people were saying, but Cristian, you don't have a shallow mineralization. Well, there you go. We released some visuals today to the market, starting from 36 meters. Well, I know that is not that shallow, but 36 meters is okay. So we have some visuals, additional visuals in these rock chips, and other visuals in these rock chips, additional visuals. Just talk to a geologist, and it will tell you what is the potential grade that we have here. So this is not a speculation, once again, this is just facts. We have intersected lithium, we release an exploration target, and we are working towards a mineral resource estimate. But what else is happening in Torque? So we are not only lithium, we are also gold. And we have a beautiful gold project, and we are the neighbors of gold fields. That's it. So if you know gold fields, you know that gold fields, they have high grade, they have shallow mineralization, and the question is, do we have that? So this is the Paris Gold Project, 2 historical pits over there. We haven't released a mineral resource estimate, and the idea is to release this MRE ASAP. So probably before the end of this quarter or at the beginning of the next one. It's not going to be super big because I don't believe in big deposits running in 1 gram per ton. That for me is not economic. But my project is going to be a little bit small, but high grade. That's what I like to release to the market. So what else is happening with the Paris Gold Project? Again, mining licenses, pre-native titles, development ready. We have water. We are actually selling water to mineral resources. And so we're super happy with this project. But probably you guys say, okay, they have gold, but do they have high-grade gold, and this gold can be recovered? We already did extensive metallurgical characterization, and the gold recoveries, well, I couldn't reach 100%, but I reached 99.7, 40% free gold. So it's an excellent project. It's a really, really good project, and I'm telling you today that this project is going to be big and massive. So, but what do we have in this project? Do we really have high-grade gold? And the answer is yes. 35 meters at 14 grams per ton, 14 meters at 7 grams per ton, 39 meters at 6 grams per ton, 27 meters at 8 grams per ton, 24 meters at 10 grams per ton, 27 meters at 10 grams per ton, 41 meters at almost 6 grams per ton. So, is high-grade gold? It is high-grade gold. Is shallow? Yes, some of the holes start from surface. So I'm going to come out with a mineral resource estimate as soon as possible about the Paris Gold Project, and you will see why I believe that this is going to be one of the best gold projects in Western Australia. What else are we doing? So we are doing machine learning in-house. Artificial intelligence doesn't exist, by the way, but we are doing machine learning in-house, understanding all the gravity, all the magnetics, all the radiometrics, all the information, and merging everything with geochem. And why are we doing this? The reason why we are doing this is because we want to come up with additional targets. That's why this company, if you read all the reports, since I joined this company, we just have delivered good news, just good news. So what else is happening with Torque? Some investors out there or some manager directors out there are telling me, Cristian, don't drill, stop your operations. Don't drill because the market is crazy. Unfortunately, I'm not like that. I want to keep delivering good news to my company. I want to keep going to my company. I want to make this company big, and I'll do it. And you'll see this the next year when I meet you again. So why you should invest in Torque Metals? Why you should invest in this company? First, because we have a super good capital structure. We have a strong board of directors. Andrew Woskett, ex-managing director of Minotaur and the Metallica. He went through a successful takeover by other company. So hopefully he's not gonna go through the process with me. We have Tony Lovehouse as well. So ex-banking, ex-geologist, so working for Torque. And we also have Iman Keynes that he works as well in the board of one of the companies of Hancock Prospecting. We are located in Western Australia. We are located in Australia. Why you want to invest your money in overseas? Why you want to risk your money in South America, in Europe, if you have a good project like this in Australia, in the safest country around the world, in the best jurisdiction for exploring for minerals. There is no best jurisdiction around the world. We have a regional and dominant position in Australia. We have 800 square kilometers of land, 12 mining licenses, 4 prospecting licenses, and 26 exploration licenses. So we are big. We have a good capacity to grow. And we are doing a lot of exploration with a different way, with machine learning, incorporating algorithms, and doing a lot of things to generate additional targets. So once again, I think that I came here the last year, and I promised that I'm going to work hard for this company. So once again, I'm going to promise that. I'm going to work even harder this year to make this company big, to put this company in a different level, because the next year, this is going to be different. Torque Metals is going to be huge. And I promise you that I'm going to work super hard, and my team will do the same for delivering good news to shareholders. So after 15 minutes, I have finished. Thank you very much for your time.
No, I'll have a hug as well. Yeah, good to hear, Cristian. Always good to hear you talk. And I'm amazed that you didn't have the photo at the end, though.
Yeah.
Cristian usually puts up this one picture of his lithium site, and he stares at it. I said, do you realise it? Does your wife realise that you look at that photograph like that? Yeah. Don't put it up on Valentine's Day. It wouldn't be good. Good day, Cristian. Nice to see such passion. All right. Now, team, do you know what you all know what a screaming buy is, don't you? So screaming buy, as defined by the dictionary, is a stock that's virtually certain to go way up in a hurry when the market comes to its senses. And I say that before this gentleman starts to speak to you today. Widgie Nickel. They have been battling in 2023. What is in store for 2024? This is Steve Norregaard. He's the CEO. He is sailing the ship, and is lithium going to fill those sails? Let's find out and hear more. Would you please make him welcome, everyone?
You can see everyone going out to nickel stock we're talking about here. Chrissy, thank you very, very much. I stood up here 12 months ago, and being a nickel and lithium explorer, I thought I was bulletproof and 10 foot tall. Well, the last 12 months has been a very, very humbling experience for us, but we're now perfectly poised, having made a huge investment in the ground in order to be able to look forward to the future with a degree of confidence. It's incumbent upon me to try to convince you that the story is a good one, it's a very sound one, and with lots of possibility going forward. The disclaimer, which I urge you can read on our website. The opportunity for Widgie, we, along with many other nickel explorers, have been murdered in the market. Our market cap, or our EV, is in fact today less than $10 million. The market values nickel sulfide very, very poorly. That is an opportunity for investors today if we take a more medium to longer term view. We've also been accused of being come issue. The fact of the matter is that Widgie finished its drilling effort, a huge investment over the course of the last 2 years early in December. So we're travelling pretty good, but it represents an opportunity. The company itself, we have a very, very significant nickel resource. It's a Tier 1 nickel sulfide resource located in the Eastern Goldfields region of Western Australia. A unique aggregation of 12 separate resources making up that 190,000 tonnes of contained nickel. It's an area that has historically been mined, and importantly, through the investment in drilling that we've made over the last 2 years, we now understand that there is a not insignificant amount of byproducts that we are pursuing to try to harness the value contained therein. In the journey over the last 2.5 years, we've also, we're aware of the presence of lithium upon our tenure. We had immediate success just on 18 months ago in discovering the Faraday train line. We now have that to a high level of geological confidence, and we're going through the technical rigour of getting that ready to be able to harness the next wave in the next recovery in the lithium price. Talking about our nickel, indeed we have 12 resources. When we started the project, very low levels of geological confidence, lots of ambiguity. We've invested over 106,000 metres of drilling over the last 2 years in infilling this resource, getting an understanding and getting clarity in terms of what we've got. Big ask for 12 resources, so we defined 6 that we thought were the high order priority targets where we've made that investment. And as you can see, we now have a significant portion of that overall resource base that's been moved from the inferred category into the indicated category. That gives us the capacity now to subject these resources to an economic study, a scoping study, so we can demonstrate the value and push this along. So this can be the next new nickel development. We've been told by investors that we should have pursued a strategy of selling our ore to BHP and Kambalda. And in times of a high price environment and a high grade environment, that's probably one that we should have pursued. But the reality is that we are now driven by reducing our costs at all costs in order to be able to survive in the longer term. So with that, the company and the board of directors said we should seriously look at a standalone concentrator. One of the unique attributes, having those 12 resources, we've got a readily scalable amount of output that we can achieve. We can actually afford to develop a standalone concentrator because we have got the mine life. And in doing so, rather than building and processing our ore through a processing plant where one size fits all, we can build something that's customised to our ores. And the process of the metallurgical test work that we're undergoing right at the moment is yielding very, very significant opportunities to add value to our product. It also is very, very king that if we have our own standalone concentrator, we make our own concentrator, we then can market that to a multitude of different potential customers that can pay full value for the product. All of this adds up to a much more compelling investment case. And it also presents the opportunity for us to look further down the value stream within the West Australian mining industry, the nickel industry in particular. We've been very, very quick to produce nickel concentrates, and at the first stage of refining, sell them offshore. Whereas the opportunity does now present and is something that we will look at seriously in the next little bit to see whether there's more value to us going down, further down the value chain and making a more robust business case. All very compelling. Now, the scoping study itself, I was hoping I would stand up here and be able to tell you the virtues of our project and have the scoping study, but that hasn't eventuated. The scoping study itself only looks at 5 of the 12 resources, so there's ample opportunity to see the project continue well beyond the term of the scoping study. We've divided it up and we saw the Widgie South area, you see denoted here by virtue of the orange squares. The Widgie South, which is Gillett, Widgie 3 and Widgie Town site, that'll cornerstone the operation. That'll be where we start. It'll be underpinned by 2 underground mines to mine those 3 resources. And the ideal starting pot, low capital entry and an ideal opportunity for us to continue. When they're exhausted, we bring on additional satellite deposits in Armstrong and 132 North. We believe we can achieve about 800,000 tonnes per annum worth of nickel ore at about 1.5% in that order of magnitude. So We won't be an insignificant producer of some 10,000 tonnes of contained nickel per annum. The fact that we can extend this for not 2, 3, 5 years beyond does give us the opportunity of looking at these downstream options for us. But I'm also cognizant of the fact that by virtue of where our project is and the fact that there's many other aspiring nickel producers in the area, the opportunity for us to consider higher production rates through collaboration is well and truly evident. The one key feature for our project, which differentiates itself from many others, is the fact that there's a low capital entry. All of the exploration that we've done over the last 2 years has been done from surface. We haven't drilled a hole deeper than 500 vertical metres. So all of our proposed underground mines are shallow by nature. They're in a dry environment. Geotechnically, they're not challenging, no seismicity. So we're perfectly poised to have something that is very, very unique in the near future. The Widgie South area is a very, very interesting part of the world. It's originally discovered in 1969, but the effort in drilling over the course of the last 3 years by us has really unlocked a superior understanding. And we sit here between these three ore bodies, some 90,000 tonnes of contained nickel, yet it's very much unfinished business from the perspective that these resources are by no stroke of the imagination finite in terms of how they've been defined. The Gillett mineralisation, which is probably the one that we've had the most success and the biggest investment, indeed remains open along strike both to the northwest and to the southeast. And I believe ultimately we'll coalesce with Widgie town site. Some 700 to 800 metres exists between the two. Widgie town site itself, in the last phases of our exploration effort there in the second half of last year, unveiled some very, very promising surprises where not on the actual mineralisation itself, but in pre-collars we intersected high-grade nickel sulfides that had never ever been considered before. The Widgie town site oxide intercepts you see and the eastern limb do represent a screaming target where we have the potential to see another parallel body of mineralisation. So once we start this mine, we believe this Widgie South area will support ongoing production for a lot longer than what the scoping study will show. Where we are, best mining jurisdiction in the world, eastern goldfields of Western Australia, located southwest of Kambalda, 240 square kilometres of granted mining tenure, and the Widgie South area here you see. The process of infill drilling this has given us a lot more clarity. What you see here is the previous resources. The effort in drilling has been substantial. The green traces here are Widgie's drilling. The black is previous historical drilling. The first of the mines, Gillett and Widgie 3, the level of detail that we've been able to get in the model and the clarity and the confidence we've got in our resource now is second to none. The second mine, or should I say, I'll go one step further forward. The second mine, Widgie town site, which is a big single body of mineralisation. It starts about 200 vertical metres and goes down to about 500 vertical metres. Straightforward mining, very, very conventional, very shallow. And the two satellite deposits that we will ultimately exploit thereafter, 132 North, where we've had some excellent exploration successes, a very, very high-grade core of mineralisation in the middle of this resource. Not a lot of drilling done here, but it's been very highly successful. It'll support a substantial underground mine. And to finish the nickel story, Armstrong, where we've got a very, very high level of confidence in the resource. and a robust mine plan to support it. The lithium story. In October of 2022, we're all enthused by the thought that we could dig a lithium resource up, send it to the other side of the world and be instant millionaires. And Core Lithium was very, very successful. They timed the market perfectly, and I was keen as mustard to emulate that. Our first effort at looking at one of the anomalies we had was Faraday, and we had instant success. Spodumene crystals growing, kicking, or we could touch them. The geometry of this resource was second to none. As a mining engineer, I thought we can dig this out of the ground for nothing. Very, very shallow dipping, broad zones of mineralisation dipping to the west. We grade controlled, as you can see by all the red dots there. Very high level of geological confidence. We've got this resource now just under 2 million tonnes, going through a process now confirming the metallurgy. I grant you it is low grade, but the metallurgical results we've had are second to none, indicating we can achieve very, very high concentrate grades and get excellent metallurgical recovery. So we'll push this deposit along and get this ready, because I believe we have a lot of other bolt-on additional lithium resources on our tenure, and I'll talk a little bit about them later. The irony of it is that Faraday is less than 500 metres away from where nickel mining started in Widgie Nickel at 26 North. The green traces you see here are the drilling that we've done on Faraday. Very, very shallow. As you can see, the red here denotes a high-grade 1% core, which, in the event the viability of is in question, we can mine the high-grade portion. Faraday has only chewed through $1 million worth of drilling, so we've done it very, very cost-effectively. However, we also, on Monday, announced another deposit in very, very close proximity to Faraday, which has the potential to be every bit as good. It's coincident with Cali Metals. They've done some exploration on the other side of the boundary. So early days, we'll see where we end up. So with that, lithium, nickel, we're not doing greenfields exploration. We're on the cusp of being ready to be production ready for the next nickel wave. Thank you very, very much.
Good boy. I don't want to have to put any of my presenters over my knee. You're much too big for that. Okay, now, next up at Explorers Global Lithium. They've laid a really strong foundation to advance their flagship project, which is in the goldfields. They're moving towards development in the next 12 months. This time last year, this fellow had parked his brand new EV out the front. I'm not sure where he's parked it this year, but I'm saying he's focusing everything on global lithium, global lithium. Would you please make welcome Ron Mitchell?
Thanks, Chrissy. Thanks to Stuart Jackson, the RIU team. Another great event down here in Freo. Although, as most of you that do know me, I'm a staunch West Coast Eagles supporter. So here to talk about the company, Global Lithium, the position we're in. Certainly one of the few companies on the planet that is in a position of strength in a market downturn. Most of the heavy spending for us has completed in terms of exploration, metallurgical, DFS, technical de-risking work stream. So we're in a wonderful position, as I say to my colleagues. For the next 6 months, we're in an extended reporting season. So really bringing all the terrific results of last year's drilling, a 60,000 metre campaign that finished only a handful of weeks ago, to market, along with some other, terrific news around the metallurgical test work that we've done, indicating super high recoveries at our Mana lithium deposit, along with some fantastic results on the approvals front, which will lead to a mining lease being granted in the June quarter of this year. So when that market rebound comes, and I'm very confident will, and if anyone wants to get a view on the market from me, I've been in the sector 14 years. This is the third lithium cycle I've been through, so I know exactly how they work and when they rebound and how they rebound. And this one's quite different to the previous cycles. So happy to share my views. Come around at booth 42 and I'll be pleased to share my views with you. But certainly Mana and Global Lithium are in a great position given the terrific work we've done over the last couple of years. Standard disclaimer, of course. Obviously, we have two projects, one up in the Pilbara, our Marble Bar Lithium project. It's an 18 million tonne resource. The traditional owners up there are the Nyamul people. And our second project, 100 kilometres east of Kalgoorlie in the Eastern Goldfields, our Mana Lithium project, a 36 million tonne resource at 1.13%. And the traditional owners in that area, the Gagada people. So pay my respects to the past. So some highlights. This is really the company on a page. A few things. I talked about having the two projects. So collectively across both projects, a 54 million tonne resource, and importantly one that has scale, certainly additional growth going forward. So that having those two projects gives us wonderful development optionality. And importantly, from an offtake perspective, 70% of our offtake is uncontracted. And that's really, really important. I've said previously, offtake is your weapon. You don't give it away lightly. And we've got tremendous interest from global, tier one counterparties across Japan, Korea, of course, China, recently India, Indonesia, of course, Europe and North America. So there's a general understanding out there that we've heard a few presenters talk about the lithium space. It's still very early days, and the sophisticated sort of producers and users of lithium in the world are actually quite concerned at the moment with the pullback they're seeing in projects and the incumbents slowing down production, because they know the demand is coming, as do I. Our projects are both JORC compliant, so we're not Johnny-come-latelys. We've been in this industry a while now, and we've worked really hard to drill out our projects and prove them geologically. So two of only a handful of JORC compliant lithium resources here in Australia, and they're in wonderful mining jurisdictions in their own right, being the Pilbara and of course the Eastern Goldfields. We are expecting an update to our mineral resource estimate for the Mana Lithium project on the back of the 60,000 metre exploration campaign which finished late December. And that'll be coming out to market in the second quarter. But that's definitely not the finish line for us. We've got a resource that's still open in multiple directions and of course at depth. We talk about jurisdiction. I think that gets banded around a lot, but the fact is here in Western Australia, we've got the runs on the board. And it's not just the location of Western Australia in terms of the proximity to the end users up in North Asia, but it's also those soft disciplines, the expertise we have here around mining, services, contractors. And we're also, of course, very close to a number of existing lithium assets in and around both the goldfields and the Pilbara. And of course, wonderful infrastructure by way of rail, road, and of course, port access. Strategic partners are important. We're quite lucky to have Mineral Resources sitting on the register at 10% and Canmax, who are sitting there as well. Canmax is one of the largest lithium hydroxide producers in China. They currently own and operate about 130,000 tonnes of lithium hydroxide conversion using spodumene as the feedstock. So we get some wonderful insights in terms of where the market's going, technology trends in the sector. And again, as MD for the company, that gives me great confidence on the downstream side. And of course, on the upstream side, having a partner like Mineral Resources is also very important. We're well capitalised. We've got 36 million in the bank as of 31 December. So again, you are going to see a very prudent, disciplined approach by the company this year in light of where the market's at, but we are pushing on. It is going to be a disciplined approach, and having that money in the bank is critical for us because we certainly won't be in the market raising capital this year. We'll look to see that market improve. We're expecting that to happen in the second half, and again, we'll be one of the few companies that's good to go by way of a de-risk project. And in fact, this pullback in the market, in my honest view, is not a bad thing. I think last year there was probably too much froth in the market, but the reality is spodumene price is moderating. It's only going to be the good projects that are left standing going forward. And they're the projects that are going to attract the investor and also the customer interest. We've got a strong board, a board with more than 180 years of experience. I'll talk about the board shortly. And I've also got some really good insights through my role of chair of the LME Lithium and Cobalt Committee. I've been in that role for about 4.5 years, and really good insights into the companies like Ford, Northvolt, what's happening in Europe, and of course China and North Asia, which is where the most of the lithium cathode and battery production is centred. And we're a company that's really thinking outside the box, value accretive. We've only been listed for a short period since May of 2021, and certainly come a long way through the diversification of our assets. And we're also always looking for the next opportunity. So just a snapshot of the company, a market cap currently around 117 million. Obviously been sold off with a number of the other lithium stocks, but sentiment is everything in this industry. And I've certainly seen it rebound as quickly as it's come off. Shares on issue, about 260 million. As I said, 36 million in the bank. The register, as I said there's a couple of high net worth individuals, Mineral Resources, Canmax taking close to 20%, and the balance retail and institutional. There's a couple of brokers covering the company on a non-paid basis as well. Touching on the board, there's about 180 years of cumulative resources experience here in Western Australia through mining, operation, EPC, funding, capital raising, legal and corporate governance. So we think we've got the right board for the company. A strong board, a very curious board. They're all local here in Perth, so it makes discussing strategy very, very convenient, and the company is very heavily committed. We've also got a great management team and the team getting it done at ground zero, and they've delivered some fantastic results for the company. So hats off, and I do encourage you to get around to our booth throughout the day and meet some of the team. So let's take a bit of a deep dive into Mana. 2 years of exploration, about 100,000 metres of drilling, a combination of RC and diamond. Currently grading a 36 million tonne resource. Just bear in mind that 36 million tonnes only based on the historical and the 2022 drill campaign. So we will have that updated MRE coming to market in Q2. Big focus on infill last year, and what we're finding is the grade is lifting, really high grades, sort of grading anywhere between 1.3, 1.6% on a continuous basis. And it's a clean pegmatite, very low in iron, and that's really important for the processing. We've found through our metallurgical test campaign, we're getting some wonderful recovery. So we've got quite a significant MET announcement coming in Q2 as well. So a combination of extensional, the resources is still open, and this year we're going to focus quite heavily on some targets to the south. There's some wonderful pegmatites undercover to the south. In fact, we had a new discovery late last year, and that's going to be the focus of our exploration this year. Great location. Location matters, and again, it's not just the proximity to key infrastructure, but being close to a major mining hub is also important. So we're about 100 kilometres due east of Kalgoorlie at Mana. Importantly, there's an operating rail line and a road, a 25-metre wide road running about 13 kilometres south of the project site. So that's unique on a global basis, and something I think a lot of our peers certainly envy. And it gives us great, again, development optionality from a logistics perspective. One thing having a great resource, it's another thing entirely being able to get that resource to market. And we certainly have the critical elements to allow that. And obviously, again, being close to Kalgoorlie in terms of supplies, spare parts, labour, water, diesel, all those things that are important for exploration and ultimately development and production. Obviously, a bit of a hotspot in terms of lithium. You can just see the location of some of the other existing lithium, JORC compliant lithium resources, both operating mines and JORC resources to the west and south of us. So we've had some really wonderful success. The initial assays that have come through on last year's drilling, our best drill incept to date, 26 metres at more than 1.5%. So we've got a really advanced geological understanding of the ore body now on the back of that infill drilling, really essential. And our mine plan and mine scheduling is now taking the results of last year's drilling and revising and really focusing on a reduced strip ratio. And in light of the current market, some wonderful optimisation opportunities around both CapEx and OpEx. You know, we will deliver a project that is economically viable in the context of the current market environment, and that's really, really essential. So our team, with that little bit of pullback, have got some time to really focus on optimisation, which is going to be crucial. So when that market starts moving, we'll be releasing a DFS that is compelling. And so we're really excited about the opportunities this year. The Mana system is a large one. It's got a strike of more than 3.2 kilometres, and again, open to the north and to the south. There's definitely an underground potential to the north. We'll look to probably open pit with an eye on the strip ratio down to probably 300 metres, 250 to 300, and then pivot and have some portals locking into those deeper, high-grade pegmatites at depth to the north. So that's the focus at the moment, and the drilling and the results have been really exceptional. Just to touch on the three zones, we've got the central zone. This is the focus of our infill last year. This is some of the verified geological data that's been included in the deposit. Again, our team has a really advanced understanding, the combination of metallurgy, and also the drill core that we collected as part of our MET program. We had 12 separate holes, collected around 12,000 kilograms of pegmatite core to underpin the metallurgical test program. So we haven't just cherry-picked the best parts of the ore body to do the MET, it's truly representative. And again, that improves the geological understanding and the processability for our flow sheet design. So we will have a whole of ore flotation circuit to maximise recoveries, because we've got a very advanced understanding on the back of the metallurgy that's been done, but also the geological drilling, which has underpinned that. A lot of companies, I think in the past, have certainly not undertaken sufficient enough technical due diligence on the ore bodies, and we've had the opposite approach. Mana North, as I touched on, this is to the north. This is a new zone that was discovered last year, and we're continuing to drill out this particular zone through extensional drilling. And again, Mana South, this is the new zone that was really uncovered on the back of last year's drilling. So there's a lot to come in terms of a potential additional open pit to the south of the existing resource. We do have an advanced geological model. We've got an internal resource geologist which is assisting us. And this is an example of the model. We have this on Verify at our booth, so please swing by and I'll be happy to show it with you. I mentioned earlier one of the few companies that's progressing through a DFS, well advanced, and we've got a great understanding on the back of all that really solid metallurgical work we've done. The metallurgical work we've undertaken, more than 31 individual flotation tests. So we've proved through resilience that this ore body, we can produce a saleable concentrate at reasonably high grades. So we think there's additional optimisation to come in terms of the MET. We've proven high recoveries. We think we can improve those recoveries another additional %. But again, I've been in lithium a long time and I understand a MET program versus a real life recovery can be quite different. I have a very sharp focus on the team to account for real life conditions. Approvals and permitting made phenomenal progress. The team's really spent a lot of time out in Kalgoorlie meeting the native title groups, and we are on track to have our native title mining agreement, the NTMA, executed this quarter, and that'll really pave the way for a mining lease to be granted soon thereafter. So this is my last slide before Christy pushes me off the stage. Yeah, on track. Of course, disciplined approach, but we are de-risked. So I'll let you read all the wonderful things that are ahead of us this year, but we're in a wonderful position. As I said, when that market rebounds, we'll be one of the first companies to be able to capture the upside. So thank you. You did well.
Yeah, you boys have been very naughty. I'm going to have Stewie down on me. We don't want Stewie to come and tell me off. That'll be awful. All right, JP. Welcome, the happiest MD in the room. It was interesting, JP, I read a headline in the West Australian this week and it stated, Galan Lithium on equity hunt to develop next cab off the rank in Argentina's lithium triangle. And I thought, do they know about your background? Because behind this gentleman's multiple credentials that he has in the resources and finance sector, he was at one stage an Uber driver.
Yeah.
Yeah, so he's yeah. But would you please welcome JP, everyone, to tell us what's happening with Galan at the moment.
Yep. Thanks very much, Chrissy, for the beautiful introduction. I'm very proud to be standing here once again. I have not been at this stage for a number of years, but it's a proud moment because when I look back where Galan has been and where we're going and what we've done, it's monumental, and I really mean it. And I'm proud because we've got a fantastic team behind Galan. It's not just the drive that I have. I got a fantastic board, very supportive, excellent management, and we're doing things, we're delivering. And we've been talking about not good news about lithium. Everyone is a bit worried, that get questioned all the time, when is this gonna change? And I will ask the audience to interact with me for just 1 second. Raise your hand if you believe that the lithium producers in Australia today are not making money or struggling making money. What's the perception in the room? Okay, what I can tell you, and it's very important for Galan, and if we come fast forward 12 months, when we come into production, Galan will make money at the current prices. $850 a ton for spodumene equivalent. Our cost, if the way spodumene, will be around $320, $350 a ton. So can we make money at the current prices? Absolutely. Why? Because we're brine. Brine producers are the lowest operating cost in the cost curve. So in the last 6 years since I started Galan, as Ron was pointing, there have been ups and downs in the industry, and I can guarantee you they're going to be, in the next 5 years, the same ups and downs. Importantly, great is king. Galan has a strong weapon that is great, that we can deliver our low operating costs. With that, a bit of little journey of Galan. Look, this is September 2019, and I took that picture from the drone. I cannot see myself there, but this is our first drill hole at Patapila. No one was putting a cent at Hombre Muerto West. Today, we have 3 stages of development at Hombre Muerto, and we're doing a lot of work. This is September 2019, before COVID, before, you know the rest. Now, February 2024, I took that picture. We have a camp, we have a pilot plant. That pilot plant is delivering concentrate. We're delivering that concentrate in Argentina, and at the back end is the construction of pond number 1. That's the most important pond, because when you're talking about brine, that's your inventory. And there'll be 9 ponds to be constructed. The biggest one is number 1, and that's the first one that gets filled and that gets concentrated as time passes through the concentration process. Well, if I can then structure Galan, we have a world-class asset. We have a large asset. If you want to translate this tonnage, it can easily be Liontown resource, just to give a metric. But importantly, we have the highest grade project in Argentina. Therefore, we'll have a low operating cost. Hombre Muerto West, as the previous picture, is being under construction. While everyone is running away in lithium, we are going the other way, because we are of the view that lithium will turn around and will come back. And the longer this lasts, the bigger the bounce. So we know this industry, we've been there. The management that we have with Galan has been in the lithium industry for 30 years, in finance, in commercial, in operation, in construction, expansion. They've seen a lot. So we'll recover. And all what we need is time to execute, and that's what we're doing. We have, as I mentioned, low operating costs in development. We have a compelling phase 2, and the permits have been lodged. They should become hopefully soon. And when they come, we are ready to ramp up. So we're not only going to be a company that is going to be in production, but we're going to be in a growth mode. We still have an exploration upside at Hombre Muerto, at Candelas and Hombre Muerto West. The more we drill, the more the things we find, and it seems like a resource that keep on giving. And we're finding new things that have not been found in brine. And so don't be surprised when we come out with a resource update, and we can then have a new target for our new resource. But as it is, it's large enough to produce 4 stages of development, all the way up to 60,000 tons of lithium carbonate equivalent in 4 phases. But lastly, there's no company that cannot be a company without people. And Galan is about people. You may not be familiar with the people behind Galan, but the people that in the industry, they know that we have the ex-A team of SQM, ex-senior VP of commercial, ex-senior VP of operations. These guys were 28 years each at SQM. They saw all the ups and downs, and importantly, they bring their own teams. So that's why the picture you've seen, we're moving. Somebody said the other day that Galan is moving at Chinese pace with Western standards. We're nimble, we move quick, and we want to be into cash flow in the first half of 2025. So where is all of this? So the picture that you see behind, it's a hot zone. So now you hear before of Livent, and you hear also about Allchem. They recently merged and they're called Arcadium. They are the lithium by production, the third largest lithium producing company in the world. And we are the neighbors. And to the north now we go POSCO. So it's a hot area, there is infrastructure, we have a large resource, we are building, we are developing, and we will become the next lithium producer in the area. So the update of phase one, as mentioned, we already start constructing, we already start filling the pond as we're constructing. We put in retaining walls, we put in the brine, we start the evaporation process, and we have long lead items already ordered, they're all coming, we're putting the liners, and we are putting everything in line so it comes on time and on budget, and we're even looking at ways of reducing our capex, because the times are not that good, but as we advance in the project, we identify things that we can start saving money. Importantly, we do have an agreement with Glencore on an offtake. It's a 5-year offtake. I've been questioned many times about what does it mean. It means that Glencore will take the concentrate at gate. It will be then processed somewhere in Argentina, and then when it gets sold, approximately 2 months later, we'll get an adjustment on the spot price that we got paid. So it's up or minus on pricing. The Glencore today is doing due diligence, and they've been to site. We are disclosing as much as we can. The things are going through the motions. I'm only asking to be patient. Companies go through these motions, and there is nothing to say that things are not going well. Actually, I was at the site visit with Glencore. The consultants were quite impressed, actually, with what they saw. They could see that this was real because they saw exactly what you saw in the picture. So my impression is that things are going well with information that I have in front of me today. We are a public company. We will say for good or bad when things need to be said. We're not holding information. So I just want to clarify because that gets asked on a daily basis. But be patient. We are delivering, we're advancing, we're looking after our money, we're making sure this happens, and we're not going to let Galan fail. Well, this is not a good thing about Galan today, but it will turn around. We've been up and we'll come back. And the main thing that Galan, when the market turns around next year, and even if it doesn't turn around, we'll make money. And that's the important thing. We have a case that we're not dependent 100% on if the market is good, we'll make Brazilians. If it's not good, we're still there. And the reason why it's because of the cost structure. We have a tight register, directors and management, that we all aligned. 7% of the company. I'm one of the largest shareholders. I live and breathe Galan. I'm doing nothing but Galan. And we are delivering because there is a sharp focus on doing what we're doing with experience behind. I want to put that slide just for context. And I believe that the market, in my view, has bottomed. And the lithium spodumene producers have been affected more than carbonate. But what I want to show in this slide is that prices are moving sideways, and they can continue to move sideways. We don't know how long. It's a bit of a black box, but there's no, as I highlighted earlier on in the previous presentation, these prices are not incentivizing anyone for investment in lithium. And the lithium demand is there. If you hear news about that there's no lithium demand for EVs, that's a very different view to what's happening in China. China is the main driver of EVs. And the EVs that are not getting sold here, they're not getting sold because they're expensive. But ask yourself this, how will this get adopted when the price of an EV will be the same as a Yaris, when it's the same price of a Hyundai i30? You know, everyone is going to go and get there. The Chinese are developing the industry, they're getting better, they are improving, and they're getting cheaper. And the technology for batteries is improving. So the new adoption is coming. And I believe that in the next 10 years, the brands that we know, some of them will be like Kodak Moment or Nokia. They'll be gone. But there's no revolution on the electric vehicle without lithium. And I believe that the prices need to start to recover. They last for a bit longer, but this is going to jump. The longer it takes, the bigger the jump. Now, in terms of economics, back to Hombre Muerto, this is where we're sitting in the first quarter of the industry. We will have low operating costs. And this case for phase 2 is not even optimized. We have found already optimizations that can move us even further to the left on that picture, lower cost. And we can get there because the lithium brine producers, they have low operating costs. We're not saying anything new. We, on a simple mathematical numbers that you can see is all-in sustaining cost for Galan is around $7,000 a ton. The price today, depends who you ask, is between $14,000 to $15,000 a ton. So you do the math and you see how strong Galan is. And importantly, this is a business that is focused on changing the planet, reducing carbon emissions, and Galan can say when it comes online, there will be on the first quartile of the cost industry and also in the first quartile of the carbon emission of the industry. This may not resonate today too much, but in Europe, it does. And as time passes, they want a cleaner and better world, and we can deliver. So the 4 phases of development of Galan, we are focused on phase 1. Phase 1 is our main focus today. Phase 2 should be coming. We have DFS for phase 2, but then there's phase 3 and 4 that we should start the engineering this year. And we have many ways of attacking this, and we got flexibility, how we can approach our development, making sure that we get, importantly, to cash flow and reinvest our funds. The board, I have one of our board members here. We got Terry, and Richard is in one of the booths. We got Daniel Jimenez, ex-Senior VP of Commercial, and we got Claudia Paul, ex-executive also of SQM. We have a very focused lithium board, and 2 of them reside in Santiago in Chile. The main man in our management team is Juan Carlos Barrera. He was the ex-Senior VP of Operations. Without this guy, we couldn't be doing what we're doing. He is making things change at a rapid pace. So to finalize about Hombre Muerto, we got a strong local community commitment. We are a company that's got a strong team behind and experience, and this is something that doesn't come along very often. And we have the best project in Argentina, and it's in development. And lastly, for the local audience here in Australia, we have also neurology play. Right next door to Greenbushes, we have our geo with us. You can go and ask him questions. We're going to be drilling this first half of the year. We have a way of doing this on a budget. We're looking after our money. But this area now is very interesting, and we are following the main zone to the south of Greenbushes. So if that works, that will be a fantastic news for Galan. And with that, I finish my presentation. Thanks very much for having me here.
JP Vargas de la Vega, this is for you. I've decided to use the carrot approach as opposed to the stick approach. So if you're out on time, you get a chocolate. There you go. All right. Well done. Here's a quote for you all. It is hardly an inconvenience when your lithium drilling repeatedly produces lovely intervals of gold load, grading up over 100 grams per tonne in a couple of holes at least. That quote is attributed to this gentleman here. Sounds like I've been having alcoholic chocolates, not just the plain ones, doesn't it? This is James Croser, everyone, if you haven't met him. He's the newly minted MD of Delta Lithium, and it's our chance now to hear from the man himself as to what the stage of play is at Delta Lithium at the moment. Would you please make him welcome, everyone?
Thanks very much. It's great to be here at RIU Fremantle, arguably the best explorer conference in Australia, and that one's for Stuart. So, Delta Lithium. We are trying to progress our slides. There we go. Disclaimer, which everyone will read. We're focused on 2 hard rock lithium assets in Western Australia. The Unithara asset in the Pilbara, up near Gascoyne Junction, and our Mount Ida project near Kalgoorlie. We've been in Mount Ida for about 2 years since we purchased that asset, and we purchased Unithara about a year ago, and we've been hard at it, drilling holes in both of those assets. We have a very strong shareholder base. We recently welcomed Mineral Resources and Hancock to the register, along with a lot of other lithium companies last year. And they're very well balanced on our register by previous significant shareholders, Idemitsu and Hancock. And that provides us with some very strong verification of our assets, strategic benefit moving forward as we develop them into construction, and validation and endorsement. We have 2 JORC resources in WA. There's not too many lithium JORC resources in Western Australia, certainly not very many that are undeveloped, perhaps half a dozen. We have 2 of them. So we're quite pleased to be in that position. We have quite a strong board of directors, very experienced. It was very encouraging to see Chris and Josh join our board late last year. That was something that was not taken lightly. It provides us with some very, very strong insights into how to operate and construct lithium mines in Western Australia, a font of significant wisdom on the basis of some of the mistakes but successes that MinRes has had, and backed up by Steve Kovac, who is the CEO of Idemitsu in Australia, and he provides some very strong connections into Japan and Asia. We do not have any offtake agreements in place, but we're constantly fielding friendly approaches from those attachments that Idemitsu has. Tim Manners, very experienced corporate executive, recently left Ramelius as CFO, went to Wildcat, and Nader Al Sayed, very successful entrepreneur in Perth with a civil contracting business, both accountants, and both very wise beyond their years, and the governance of our company is in safe hands. So what are Delta's strengths? Obviously our team, notwithstanding the experience of our board, we have a very, very strong team in the Perth office, which has life of mine vision from drilling holes through approvals, construction of mines. We know how to build mines. We know what mines look like. We can imagine the things that we need to do to make that happen. Our major shareholders have very deep pockets, so when the time comes, access to capital should not be a problem. Obviously, we need to convince them of the very good reasons, but that provides us with a significant strategic benefit. It's also quite well balanced. Having 4 significant holders at the top of the register, they do tend to keep each other in check, I guess. There's some very nice friendly tension going on in the boardroom. Location-wise, we think we are in the best place in the world for hard rock lithium. Obviously, WA produces, well, just a little over half of the world's lithium from hard rock. It's a very well-trodden path for the approvals process, and we have 2 JORC resources sitting in WA. One of which is at Mount Ida, which we have phase 1 approval to commence mining when we see fit. We have our first JORC resource there, and also a little bit of gold, which was the reason we purchased that in the first place, and it kept getting in the way when we were trying to drill the lithium. Yinnetharra, our maiden resource, came out just before New Year. It's looking like it has significant scale up there, and we're putting a lot of our assets into ongoing exploration up there, and indeed increasing our land holding. Our upcoming catalysts will be that extensive exploration program, the mining and metallurgy studies that go along with looking at the data, the resources, and how the best way to exploit them and turn them into mines. And there is obviously regional growth potential at Yinnetharra, and we are looking for opportunities. So let's have a look at Yinnetharra. We acquired this a little over 12 months ago. It is located about 2 hours up the road from the thriving tourist hub of Gascoyne Junction, which does have a very good caravan park and a pub. And it's quite a nice drive up through the station country to get to Yinnetharra. We have a camp up there of approximately 20 people, bunch of caravans. We're looking to improve upon that, make it a little more comfortable. It's quite hot up there at this time of year, but we're busily beavering away up there, drilling a lot of holes. We've identified about 50 pegmatites at Melinda. It is a relatively small postage stamp, I guess, in the grand scheme of Yinnetharra. We have a heritage area of approximately 20 square kilometres up there, where almost all of our drilling activity has happened for the last 12 months. And we're looking to step outside of that boundary during the course of this year as our heritage studies proceed from there. And we do have a schedule for them to commence. We also have expanded our footprint recently by acquiring the lithium rights over the Lions River project to the southwest of Yinnetharra. It's quite an early greenfields prospect, but I'll talk a little bit more about that later. So what does Melinda look like? The resource just prior to New Year outlined the 4 or 5 main pegmatites that deliver the bulk of the tonnes into that resource. It is quite extensive at Melinda. Some of the pegmatites, the M1, it is over 1.6 kilometres of length, and we've drilled some relatively deep holes to 350 metres and still finding mineralisation. The tenor of which is quite good. Upwards of 50 metres plus at 1% plus, with some internal core areas above 2%. It is early days with the metallurgy. We did take some samples and they floated off quite well, produced an average recovery to a 6.5% spod con of about 69–70%. We'd prefer to get the recovery up and drop that grade down a little bit to around 5.5. So that work will be ongoing, and once we get enough core together this year, we'll seriously get into the metallurgy at Yinnetharra. Like I said, the maiden resource last year, 25.7 million tonnes at 1%. It is quite a robust resource with growth extensions that we are chasing now. We drilled approximately 500 holes, a bit over 100,000 metres into the various pegmatites at Melinda. About a quarter of it is in indicated category, so you know we think that's ready to throw a scoping study at that. Early indications are that the strip ratio should be quite favourable, and I put that diagram on the right to show a section of the M1 pegmatite. the point I want to illustrate there is that the main high-grade core of the pegmatites at Melinda do sit within a larger pegmatite ore body, so any mining dilution won't include the iron-rich country rock that has caused so many problems with some of our producer friends. So we're quite interested in seeing how all that falls out. We will be commencing the scoping study, as I say, and metallurgy and geotech work will kick off with that. And we have commenced the mining licence application over Melinda. So what's coming up this year? There's approximately 150,000 metres of drilling at Uni planned. We've just rolled a fourth rig up there. We've got 3 RC, 1 diamond now at Melinda, doing ResDev and stepping out east and west along strike at Melinda. We will have that up to 6 rigs in June, by June, through to the end of the year. Primarily doing regional drilling with a few of those rigs as we open up the prospects that we've identified via heritage surveys. We do have about 20 people on site managing those rigs, but we have 3 teams out in the bush also doing the real grassroots greenfields work. It really is a blank canvas out there and an extremely large paddock. And we found the best way to find prospects is to do the geochem sampling, look for the lithium anomalism and map at the same time. And if you can line up that information, then you've got yourself a prospect, and we'll be throwing a rig at it as soon as we're able. We're also working on the flora and fauna studies in conjunction with Heritage. We commenced them last year, so that'll feed into the approvals process, which will kick off proper this year. We are targeting getting at Jamison's, which is our next cab off the rank for the prospects. Next week, we're out there doing final heritage, and we'll have a drill rig out there as soon as possible. We do have some high-grade rock chips up to 4% in the pegmatites that we've mapped out there. Lions River, we added to our lithium tenure. That's quite a greenfields play as well, but our Unithara group of field staff will be running around out there. That's got similar lithologies to Unithara. Mount Ida, we bought this 2 years ago, like I said, drilled a maiden lithium resource there, which is quite high grade, approximately half of that's indicated. We are continuing our work out there in light of the gold resource that we brought out in the final quarter last year. That is going to add significantly to the economics of that project, a little bit of complexity around that. Does afford us optionality, and we are waiting to see what happens subject to market condition and some of the conversations we're having with nearby gold producers. I put this slide in here to show the conceptual plan of Mount Ida. It's a bit of a curiosity having the lithium ore body in such a close association with the gold. There's potential to share capital at Mount Ida. The gold is quite high grade. If we get to that first, then it does afford a free kick to the lithium mine. We're continuing our mapping work out at Mount Ida. We don't have a rig there at the moment, but we will be looking at including the gold into the mine plans. There's a bit of a section there. I'll run out of time, very sorry. High grade oxide gold in close association with the lithium at Ida. So I'll leave you with that slide to look at what's coming up, the strengths of Delta, and thank you very much.
Go, James, go.
Well, I don't get a chocolate.
And I'm eating a chocolate. No chocolate for you, no chocolate. All right, let's see if my next presenter is better behaved. You did have good information and a great presentation, James. All right, so Latin Resources, this is the CFO, Mr. Mitch Thomas. Now, he's been in this role for less than 12 months. And when I caught up with you last year, it was RIU in Sydney, and he was a very excited individual, very passionate about what lay ahead for the next 12 months. He's still smiling, which is a good sign, because I've read all the news flow and there's a heck of a lot happening. So let's see if you can win your chocolate or earn your chocolate. Would you please make Mitch Thomas very welcome, everyone?
Okay, thank you very much, Chrissy, and good afternoon, ladies and gentlemen. Look, a pleasure to be here. So a big thank you to Vertical Events for hosting, as always. And so, look, for those that may be unfamiliar with Latin Resources, look, we've been incorporated for a little bit over 15 years, which is quite rare in this space. But it's fair to say that the last 3 to 4 years have been transformational for our company, and that's since the discovery of the Salinas lithium project in Brazil. So look, the team has done a lot of wonderful work, and I'm keen to give you a few updates and also highlight a few milestones in the next 6 to 12 months. So look, firstly, just starting with Brazil, and look, I'm from Perth, we're here in Perth. It may not be known that the quality of mining jurisdiction that we have in Minas Gerais in Brazil is truly world-class. So look, it's a population of about 21 million people, but there's over 300 operating mines. So I think the best analogy that I can make is that it's almost like Western Australia, but in Brazil, but with a phenomenal cost structure, so being low cost. Now, look, the things that will really support our project are the infrastructure. So it's a hydro-backed grid, so about 88% of the electricity comes from hydropower, which we'll tap into, and that's also incredibly cheap. So 3 to 5 cents a kilowatt hour, but also the green credentials, being zero carbon, also really help an energy-intensive project like ours. Other factors, mature, port infrastructure, but also roads also really support us in getting things in for construction, but also getting product out once we're in operation. I think it's worthwhile saying that, look, we've got such a wonderful base there from an infrastructure perspective, especially on the hydropower, that, look, in return, we want to make our operation as sustainable as possible. And so in that respect, we'll have a dry stack tailings, which it's a sensitive issue, tailings, but dry stack is an excellent solution for us. Also recycling water. Look, we're doing it at the moment. We'll do it in operation. So I think, the point that we want to make, and especially in the current market with current sentiment, is that we don't just want to be a lithium spodumene concentrate producer. I think that's a vision which is a little bit low for the standard that we want to set. We truly want to be a sustainable producer, both environmentally, but also financially. And look, we have the resource and jurisdiction to deliver that. So the resource. Look, we've been a resource story for the past few years, and rightly so. So look, when I started with the company, the reported resource was 13 million tonnes at 1.2% lithium. Standing here today, a little bit over 12 months later, it's 70 million tonnes at 1.3% lithium and growing. So look, we've got 16 drill rigs on site at the moment. So a lot of that is infill drilling, but do expect some resource upgrades as we head towards our DFS. And look, this thing is showing no signs of slowing down. And we've got a number of targets that, look, once we're done with the DFS drilling, we'll step those out and again, grow that resource. I think, look, one thing I also want to highlight is that the infill drilling is taking place, and that's really to support presenting our maiden reserve, which will support our DFS. But what we're seeing with the infill drilling is that the actual grade is improving. So look, hopefully you can make out the table, but you can see an indicator there. We've got 39 million tonnes at nearly 1.4% lithium. So I think it just goes to show that we're getting a really good return on investment with that infill drilling. And so I think, exciting news for shareholders there. Look, a little bit more on Kalina here. I won't talk too much apart from just stressing the fact that we're drilling this like crazy at the moment. We've got 16 drill rigs here at the moment. I think one thing to highlight though is if you look at the mineralized zone in the image to the right, is that, look, this thing was born to be a large open pit. And what that gives you in the lithium space is, I guess, from a technical perspective, the risk is lower. So Brazil is a very mature mining industry, and open cut mining is not a challenge for that jurisdiction. But it also gives you options. You can expand, you can ramp up as you see fit. So look, very happy with the ore body as it's shaping up, and yeah, seeing it as an operation in a few years' time. Look, this is the layout from the PEA, which we submitted in September last year, and you know, as is the case, given we're in the middle of a DFS, it's already out of date, and I think worthwhile saying that we've already improved upon this layout, and specifically we've improved the layout of key infrastructure, which is going to reduce our holding routes, and what that means is that it's an even further reduction in our already low mining cost, and potentially even lower capital, just in terms of servicing that fleet and the like. So. The PEA was last year, the DFS is ongoing at the moment, and we're seeing already, you know, material improvements on what we submitted. So, you know, watch out for this study in mid-2024. One thing to highlight is that the PEA considered a 1.5 million tonne per annum, I guess, start, ramping up to 3.6 million tonnes by year 4. So very sizable operation, and, you know, something with scale, which, you know, in this industry at the moment, I think the scale really affords you, you know, those economies and those low costs. And so that's, you know, what we're targeting. So look, on the flow sheet, so we've spoken about the resource, you know, 70 million tonnes, that's massive, and it's growing. You've seen that the mining technique will be open cut mining, so very low risk. Look, the next question you have to ask is, you know, what does the flow sheet look like? And for us, you know, based on the test work that we've had out of SGS Lakefield in Canada, which is an excellent facility, is that it's always been DMS, and so dense media separation. And look, what that means is that you miss the flotation step in your production of your high quality concentrate, which is what we'll produce. And look, that's enormous for us, because it saves capital, it saves you know, risk in terms of that flow sheet development, and also time. And look, for comparison, and you know, we're very fortunate with the spodumene ore that we have, but in WA, look, flow sheet is the norm to produce a high quality concentrate. But the fact that we can still produce a high quality concentrate without flotation is a massive advantage for us. And validation for that is that we have an operation down the road, so 50 kilometres away, called Sigma Lithium. They're producing with a DMS only flow sheet, and they've been in, you know, production for a little bit over 6 months now, but they're already getting recoveries in the mid 60%. And so that's just, you know, fantastic validation for us. And we're also using the same consultants, so very much fast followers in that space. So look, the PEA, look, I'm the CFO, so a finance person. So this is a very attractive business case. I worked for Rio Tinto for 12 years. I've probably looked at, you know, hundreds, if not thousands of projects. And this truly is a fantastic business case. You can look at the NPV and IRR numbers, all post-tax, very solid. But the key takeaways for me, and again, I've looked at a lot of business cases, is that this is low capital, so 250 mil US to get going, but also low OPEX at $536 all-in sustaining cost. So that's landed to your customer. And it's very rare that you get a project in this sector, in mining in general, that's both low CapEx and low OPEX. And that's really due to Brazil. So structurally, we've got a cost advantage that, look, we'll take advantage of. And that really helps us be sustainable throughout the market cycle. So very fortunate, and I think it's worth saying that, look, we're in the DFS at the moment, we've had initial results, we really want to build upon this in the DFS. So PA was fantastic, but we're going to go a step further in the DFS. Look, and probably on that point, so the ultimate production that we anticipated or you know, forecast in our PEA was producing an SC 5.5, so that's the concentrate, of 525,000 tonnes per annum after about year 3 or 4. And look, that's a big operation. So Pilbara's run rate at the moment is about 600,000 tonnes per annum. So the PEA was ambitious, but we want to take it a step further. So that we've got the low cost in Brazil, we've got the large open cut mine, we want to look at doubling that as part of our DFS. So that's absolutely massive. And that's what we want to do, because you have to have scale in this industry to make a difference, and that's what we're looking to do. So look, a little bit on the CapEx, which I've spoken about, but I think funding is the most important thing, especially with current market sentiment. So to this end, look, we started an offtake process in November 2023. We also have a project finance kind of market sounding process going on at the moment. And look, both are progressing to schedule. Initial feedback's been very positive. So expect some more announcements on that in you know, the next kind of 3 to 6 months in the lead up to our DFS. I'm actually on site heading out in 2 days' time, and there'll be a few parties visiting as part of that offtake process. So, you know, all things are, you know, steamrolling ahead and doing everything that we can do to de-risk this project ahead of FID later on this year. OpEx I've spoken about. Again, we can be a sustainable and scaled producer in the current market and in most markets that the lithium industry has seen over the last few years, which is an excellent advantage for us. And again, it's a big thank you to Brazil, and structurally, the cost makeup is very attractive for us. Look, I spoke a little bit about Sigma Lithium. If you're aware, again, 50 kilometers away, they started production in about April last year. And so they're still ramping up. But, what I want to highlight here is that, we follow them very closely. We've got a great relationship. Probably not a month goes past that we're not on site or, sharing conversations with their management. But what I want to share is that their Q3 operational result, so they're NASDAQ and Toronto listed. And so as part of their SEC or US listing, they've got to produce quarterly results. And truly their cost performance has been fantastic. So this was after being in production for 6 months. They're producing at $485 a ton US. And just for reference, Pilbara reports under the same basis, which is FOB ex royalties. They were at $415 a ton at 31 December. So look, Sigma within 6 months is within touching distance of Pilbara, who've been operating for a lot longer. And Sigma have highlighted that their trajectory is to reduce those costs even further. So look, this is the proof, the validation that the cost structure in Brazil is truly fantastic. And again, we're looking to be very fast followers of Sigma Lithium because what they've done for the company and what they've done for Brazil is absolutely fantastic. Minas Gerais, look, I'll just comment again, fantastic jurisdiction. It's great to be working somewhere where the government wants you in production just as much as the company. And we've got Governor Zema, the MD of our company, Chris, is alongside, and he's in close dialogue with his counterpart there in Governor Zema. And so to have their support is exceptional. Look, ESG, we could speak in a lot of detail here, but I'll quickly highlight that we submitted the EIA in December last year, so just over a month ago. And look, this was over 2,000 pages, an incredible document that really articulated the sustainable approach to mining that we want to take, and the feedback from the government has been exceptional. And it's fair to say that there's a lot more to kind of be told in this space, and the DFS will do a good job there. Because again, we don't just want to be, just produce a spodumene concentrate. We want to be extremely sustainable, both from an environmental perspective, but also value. So look, schedule, a lot going on in 2024. So, we'll have 2 more resource upgrades this year, which is great. We'll grow this thing even further. The DFS will be around mid-year, so we're progressing at pace. We've got support from Worley, Minsol and SGS, true leaders in this industry. We've got the offtake process, we've got project finance, we've got permitting, and then we've got FID. So look, the team is working incredibly hard, both here in Australia, but also in Brazil. So, exciting news flow ahead for our shareholders and stakeholders. Brazil, located in an excellent location. Look, the market is orientated around Asia at the moment, but that will shift. And with our schedule, we're very much aligned in terms of feeding that North American and European market. And it's fair to say there's good representation from those markets in our offtake process. The board, so look, David and Chris, they founded the company. So there's nobody more excited about pushing this project forward than these two. And it's really quite infectious to work with them. They're incredibly energetic. We've got Peter. Look, we had an announcement out today. He's actually converting to an executive director. So this guy ran Greenbushes for 15 years. When he speaks to lithium audiences, people listen because he just knows what he's doing. And his support, personally has been fantastic. So great to work with him. And also worth mentioning that Brent and Pablo are fantastic and provide a lot of, thought leadership to our company. The team, and look, I'm here, are fantastic. We push each other, we challenge each other for the benefit of the project. And these truly are world-class professionals. So it's a pleasure to work with them. Look, lastly, just on the market. So look, this was a snapshot at 31 December, just to get the EVs to line up. The share price today is about 20 cents. It's been a tough start to the year for lithium. I think, sentiment is really being questioned, but, we're very bullish on the outlook. The demand from offtake partners is as strong as we've seen it. So we want to say a big thank you to our shareholders for their loyalty, and we've got a big 2024 to come. So thank you very much.
And he's waiting patiently, isn't he? I have to give one up. I'm 3 down, I'm 3 up at the moment. There you go. Well done. Congratulations, buddy. All right. Now, this is an interesting discussion we're about to have. You would have seen when Hamlin presented yesterday, they talked about their position that they'd earned this year on the Explore program, so BHP's Explore program, which is really, it's more than a game changer. It's disrupting old investment models in the minerals exploration space. And it's opening the door for early stage explorers to accelerate discoveries. So Ms. Mosse is going to tell us a little bit more about the program. I'm expecting how people can get on board with it and what it is that you're hoping to do, because it's been 12 months now, so this is the second group through. Is it something you're going to keep going forever into the future, or has it got a finite time period?
We're expecting to go for round 3. Let's see how we go.
Excellent. Would you please make a very, very welcome, everyone. This is Lisa Mosse. She is the Program Manager for Explore.
Brilliant. All right, I'm going to start by setting the tone and kicking off with a bit of a video to give you a bit of a feel for BHP Explore.
BHP Explore is a fantastic opportunity. Innovative.
BHP Explore is fun.
You can edit out the pausing. An avenue to take me from what was an interesting idea and turn it into a reality.
It's exciting.
I think it's exciting. Unique.
Collaboration.
Rock.
BHP Explore is discovery success. The opportunity to meet and collaborate with experts and fellow peers.
BHP Explore is a paradigm shift.
Alrighty, a little bit of fun to kick us off. Look, we wanted to start by recognizing that it is a tough time to be in exploration, particularly in the junior market, as we all know here. There are many challenges that junior exploration companies are currently facing, in particular with regards to funding cycles and being put in a position to have to continuously focus on chasing that next investment. I'm here today to talk to you about BHP Explore, an accelerator model that's looking to break that cycle. By offering junior exploration companies funding, industry-leading tools, access to expertise, and a global network, we're offering an opportunity for these companies to pause, to actually take the time to focus on the geology, to focus on the business, so that companies can transform and find the discoveries that are essential to all of our futures. Now, some of you may have heard about Explore before. Some of you may be intimately familiar with our program. We do have alumni and current cohort members with us today. For others, this may be a first. So I ask of you to entertain me a little bit over the next few minutes, to bring you on a bit of a journey, and to answer questions that may be top of mind with regards to Explore. What is this program? Why is BHP doing this? How does it work? And is it for you? And if so, what is it that you can get out of a program like this? So BHP is the largest integrated mining company globally. We're focused on producing the resources the world needs to grow and decarbonize, and as such, we have positioned our business to support the mega trends that shape all of our futures. Copper for renewable energy, nickel for electric vehicles, potash to support sustainable farming, iron ore and high-quality metallurgical coal for steel and infrastructure. As you all know, the demand for critical minerals has never been higher and continues to increase. And as such, if we're going to meet the demand to drive the energy transition, big companies like BHP are going to have to do things differently. BHP has therefore looked towards the outside world, looked at other industries for inspiration, and looked to find innovative solutions to solve for this, knowing that we can't keep doing the same things and expect big changes to happen. And it is in this vein that the story of Explore begins. Explore is the first of its kind accelerator model to hit the minerals exploration market. For those of you familiar with this model, it's particularly popular in the technology and pharmaceuticals industries. And what we've done is take common attributes such as an open call for applications and a cohort-based program and made these tailored and fit for purpose for the minerals exploration industry and junior explorers in particular. We have designed a program that looks to take ideas and accelerate these as well as the companies behind them. We're looking to address the specific challenges, the financing challenges that face our market to drive forward these ideas and exploration concepts that all too often don't get to see the light of day. So one question that we've received quite a lot over the last day and a half is, who is Xplor for? Who is BHP looking for to join us on this program? And the answer is not a short and sharp cookie cutter one, but the headline is that we're looking for you. We're looking for a broad spectrum of individuals and companies alike that have big, exciting new ideas about minerals exploration and where to find the major discoveries of the future. The ideal candidate profile for Xplor therefore lies on a pretty broad spectrum, as evidenced by the composition of our 2023 cohort and our 2024 cohort that we announced in January this year. They include explorers, communities, big companies, small companies, innovative technologies. And as we like to say in our team, it really does take a village to come together and address the challenges that we all face in meeting the goals of the energy transition. Through Xplor, we're striving to connect these dots, to connect all these different people who share our passion for exploration and want to contribute to solving these challenges together through our accelerator program. So whether you're an individual with an idea or you're a publicly listed company, we want to hear from you. We'd like you to pass over to our booth. And what we encourage you to do is to familiarize yourselves with the program and to engage with our Xplor team to see whether this is an opportunity that you would like to pursue as a company or as an individual, so that when applications do open up again for round 3, around August, September of this year, you're able to put your best foot forward. Now, the program offers funding, but it does so much more than that. Whilst the 500K non-dilutive funding that we offer does get the bells and light bulbs lit up, this is just a start and is the first step at removing the well-known investment challenge for early-stage exploration. This funding across the program is just a start, followed by the opportunity to pitch for follow-on investment at the end of the 6-month program. However, anyone familiar with accelerators and with our program in particular, the value goes much beyond just this funding and really lies in the offering of the program itself. Whilst every accelerator model looks slightly differently, I'm going to quote Mike Jones of Impact Minerals, who's with us potentially in this room, who called an Xplor 2023 alum, who described Xplor as a mini MBA for minerals exploration. And the Xplor program delivers this through 3 core pillars: business, technical, and operational, where both program content and the experts that we provide access to are carefully selected to deliver the absolute best that BHP has to offer. And we don't stop there. We also dive into our external networks and look to connect our participating companies with service providers that are, again, carefully selected to support the participants and their projects that have joined us on the Xplor journey. The program can hereby be summed up as a combination of funding, support, and connection that provides participants the resources and, importantly, the time to focus on improving their understanding of their projects and of their businesses. In a way, it gives companies the time to slow down in order to then speed up and accelerate the path to discovery. So we curate this program of a very intentional 6 months that's made up of a series of both virtual and in-person touchpoints. In-person events such as Bootcamp, Toolkit Camp, and Showcase Week focus on equipping companies with specific frameworks and tools to advance their projects, and by doing so, to become more investable as opportunities, as teams and businesses. The programming cycle that takes place between these in-person events is composed of masterclasses and one-on-one coaching sessions across business, technical, and leadership streams, all culminating in the very exciting and final Showcase event, at which we celebrate the achievements of the cohort publicly. Now, our 2024 cohort kicked off boot camp in January this year and is currently getting ready for Toolkit Camp, which will take place in Toronto off the back of PDAC. I'm going to show you a little video that brings this event to life and hopefully shows you a little bit about what the program really feels like.
Toolkit for Explore is a way to connect the cohort companies with the external ecosystem of vendors, suppliers, and technologies.
The purpose of this event is to connect our participants into the BHP networks of service providers.
And it's also the opportunity to work with companies and people across the world in different commodities, different geologies, geographies.
They can get to sit with the vendor, and even more so, the vendors get to pitch it to the cohort.
We have 20 plus service providers coming. They're all going to be in different rooms and moving in and out with our cohort participants.
We've been introduced to a selection of suppliers who've been tailored to our needs.
Vendors who will offer geological or geophysical services, as well as ESG and risk management services.
And it's just allowed us to engage earlier with groups that can help us and really accelerate our exploration plans.
Finally, I feel like we're having the real conversations that are required. That to me is unique. It's something that's different and something that I truly believe is going to make the new discoveries of the future.
I found the workshops exceptional. I think it's extremely applicable to what we're doing.
I'm actually learning firsthand from BHP and its networks of experts, new technologies, new techniques. We are going into the new stage of exploration, which is much more technology oriented.
Now we're thinking, well, how can we implement them in our exploration?
Explore has the opportunity to unlock those resources in a way that we've never done before. And that doesn't just impact BHP, that impacts the world.
Now, Explore does work. We've seen the results. In our first year, we had teams do 2 years worth of work in only 6 months. We had teams develop some of the largest regional data sets that exist today. We even had one team going from being an individual researcher with a big idea to a fully fledged business. And the reason why Explore works is because its basis at its very core is collaboration. We're looking to shatter old ways of doing things and creating a new partnership model, a new way of working together as a big major with smaller junior exploration companies. And through Explore, as BHP, we have come to challenge our own perceptions and ways of thinking about majors versus juniors, looking to break down silos and come together as one, as explorers, working together towards a common goal, which is that next big discovery. We know that partnerships are a two-way street. They're built on the currency of trust. And we have kept this at the center of the program's design in order to achieve, at the end of the 6-month program, an optimal win-win scenario. I've talked to you about what participating companies can get out of it. Not only is it a barrier, is it an opportunity to remove the barrier of financing, but an opportunity to get access to expertise, tools, and support. I imagine the question that's probably on a lot of people's minds is why BHP is doing this and what BHP can get out of it. Well, for BHP through Explore, we're able to broaden our reach, to expand our pool of ideas, to build new relationships and potential long-term partnerships, to drive a pipeline of new opportunities that can help shape our future growth portfolio. So where are we at now? As I've mentioned, we've got a cohort number 2 that is getting ready, that has been onboarded and is getting ready for Toolkit Camp. And we're currently finalizing further deals with a number of last year's cohort. As a team, we are thrilled to be going into this year confident and, to be honest, a little bit more relaxed, knowing that this model works and that the program really does offer so much more than funding. The last thing I'd like to leave you with today is my favorite part of the program, which is its community aspect. We've succeeded, not once, but now a second time, to build a community of explorers. Last year, our team started out not knowing whether building a community would even be possible amongst a peer group that could be perceived as competitors, and we've definitely been proven wrong. We've seen that Explore really does bring people together through a common and shared passion for the Earth, its future, and the treasure hunt that we all call exploration. BHP Explore builds a community that lasts way beyond the 6-month program, as is evidenced by the multiple WhatsApp chats and all the photos we receive from previous and existing cohort members meeting up as friends across all corners of the globe. As shown here, Juho Haverinen from Nordic Nickel called Explore life-changing. And I know that that's a pretty big, bold statement, but it is one that we proudly continue to hear over and over again, and one that we believe is true, that Explore can be life-changing as well as industry-changing. Thank you all for your time today, and please don't hesitate to jump over to our booth if you have any further questions about Explore and whether this may be an opportunity for you to pursue with your companies.
Lisa Mosse, would you like your chocolate or may I eat it for you? It's a gluten-free Barchi. It's got a little message in it, especially for Valentine's Day. Thank you so much. Well done. I've actually had the great pleasure of doing some training with some of your graduates from the program last year. And it's interesting because it lifts them in all manners of thinking, how they can tell their story. They were talking with them. They were so grateful to be part of the program, which was wonderful. Right, you're already lined up to go down the cattle run there. So enjoy your lunch. You will hear the bell in about half an hour's time. And our next session is an absolute doozy. So I want to see every single one of you back